So, Oliver, fun and games in the European IPO markets today. What's happened?
So we've had the flotation of NN Group. It's a Dutch insurance company. It's one of the biggest IPOs in Europe so far this year. It's been floated off by ING, its parent company, the Dutch bank. And it's quite a feat to get it out of the door, I suppose, given the difficult IPO market at the moment. We've had a lot of companies pulling their IPOs. And also there's a lot of equity being going into the European financial sector through bank rights issues. So ING has done quite nicely to get NN Group away. It's had to do that. It's got to sell down its stake in NN entirely to nothing by the end of next year, by the end of 2016. So this is the first step on that road. It's sold down just under 30% of it.
So I presume it must have been priced quite nicely. But what does that mean for the rump of what's left at ING then? And they've obviously still got some. So what does that mean going forward?
They've still got that. This is part of a big process to sort of clean up and slim down ING, which was a big bank assurance group. It needed some government support during the crisis. What it needs to do now is pay off that government support, and it's getting rid of all its insurance businesses. And what will be left after that is a more straightforward bank. So it's just floated off NN, which is its European and Japanese insurance business. Last year it floated off its American insurance business, and it's taken its stake now down to below 50%. It's also paid back a lot of the state support. It's got another €1 billion or so to pay of that. So things are moving on nicely. And the idea is that now, with all this kind of corporate action out of the way, it can focus on getting the bank into a fitter shape. So it's cutting costs, and it's looking at its return on equity, and it's just aiming to sort of normalise things.
So is that making ING look like quite an attractive prospect at the current levels? Should I be buying it now? Should I be waiting? How's it looking?
It looks interesting at these levels. The valuation put on the NN part of the business today suggests that the rest of ING is trading about 1 times book value. That's a discount to the sector, which is on more like 1.2 at the moment. Perhaps that's partly due to the sort of conglomerate structure and the conglomerate nature of it. But as ING sells down these insurance businesses, a bit more of that value should be realised. So it looks fairly cheap. And what you'll be left with is a bank with a reasonable dividend once it can start paying them, probably in 2016. And some growth in Germany. It's got a big business in Germany and in Eastern Europe. Not a wildly exciting bank. The return on equity it's promising is up to 13%, whereas some of the racier banks are promising up to 15%. But probably quite sensibly, nicely well run, and with a decent dividend, and the shares are looking fairly cheap at the moment.
Sounds like a good price then. Thank you very much, Oliver.